The best part of PDAC is you get to hang out with some of the best geologists in the field. We have a special edition of At the Bar today. Joining me today is Ron Stewart. He's a Canadian geologist who was the head of research for Dundee for many years. He now works on the banking side with Clarus Securities. I also have Doug Kirwin. He's an Australian. He's worked with Ivahoe for over 18 years, and now he just travels mines all around the world for personal pleasure. On my side over here, we have a face that I'm sure everyone's used to, Bret Cook, editor of Exploration Insights. On my other end, I have Simon Ridgway. He's not a geologist, but he is the face behind Goldgroup. And finally, I have Graham Brown, a Scotsman, correct?
Absolutely.
Who is with Anglo American. And finally, last but not least, I have my colleague Alex Letourneau of Mining Minutes from Kitco News. So thank you all for joining us today.
Pleasure.
So I'd like to start by saying I thought we were at the bottom of a market, but it seems to me by the attendance at PDAC is not the case, guys.
Everybody's looking for a job, as somebody said earlier.
That was your line, Doug.
Or selling their prospect.
Yeah.
The PDAC is all about bringing people together to actually do business and change prospects or sell and buy prospects. So people come here to do business.
Right. Do you think it's almost like you still have to show up at PDAC or it just looks bad?
It's a forum that brings 120 countries to one spot. So when you bring people together, business happens.
Right. So what do you think is the sentiment? What are you feeling? Most people I've been speaking to have obviously said there's a lot of pessimism in the industry. Is that what you're finding this year?
I don't think there's a big change in the mood of the people. I mean, people are still trying to vend projects, and people are trying to buy projects. Majors are still looking for projects. Companies are trying to get finance. I'm not seeing a big depressive cloud over it, even though we're all dressed in black.
It's also early enough in the budget year that there's still money around. So it might be different if this meeting was in December, but early in the year, a bit more optimistic.
It seems okay to me. I mean, I was surprised. I thought it'd be depressed at, in Vancouver in January. It's not, and it's still vibrant. I mean, I think probably half the people on the floor are looking for jobs, and the other half are looking for money, but they're still all here doing something.
Right.
Yeah, the attendance surprised me. I thought there'd be far less people here this year, but it seems like it's bigger than ever.
Right.
Our industry goes through cycles all the time. Most of us have been through more than one cycle, and sometimes things go up, sometimes they go down, but real deposits, real business still happens. So we're all here still trying to find real deposits.
Right. So let's talk about money. I think, Graham, you mentioned that a second. Basically, what I've been hearing is that, I hear two sides to the equation. Some people tell me, well, it's just impossible. There's just no money out there, impossible to raise capital. Another analyst I've been speaking to say, no, it's not the case. There actually is still money out there.
Well, I think it depends what side of the fence you're on. Generally with the majors, what they try and do is have consistent funding and take into account those cycles. So you try and have a minimum load to keep going, whereas the juniors are always driven more by what they can raise. So they're going to be a lot more affected by those swings. So majors usually long term, whereas the juniors are a lot more driven by what's available in terms of capital. And that can be an opportunity, obviously, for people who've got money.
Simon, or?
And truth be told, there's still a lot of metal being produced, whether it's gold or copper or whatever. That metal is being drawn down every year, so there's a demand for metal, and demand has to be met with new supply. So every company out there has to find new supply somewhere. So they need to know what prospects are out there, whether the cycle is down or up. You're still looking for those big prospects.
And you can still finance. I mean, if you got the right project where you have a good reputation and people know you use the money well, you can finance. I closed 2 financings in the last 3 months. So it's not impossible.
Doug?
Yeah, the markets, I think, they're cyclic, and in a career, one experience is 4 boom and busts is the average, and this is my 4th. So it's not the first time we've been here.
Right.
But
you're above average.
I wouldn't say that. I've got another couple to go, you mean?
There you go.
One question, does this downturn feel any different than the others? Is this gloomier and darker?
And then we've seen it, we've all been there before, but as Graham says, anyone with half a brain would take more than a 2-year view. So you ride out the cycles, and the smart people find things in the good times and buy in the bad. It's as simple as that.
So what are you guys doing? I mean, is your budget being cut? Are you out there buying stuff now? Because stuff's cheap.
Our budgets haven't been cut, and you've got options. Do you do your own stuff, or do you look for partnerships? And what you're trying to do just now is pick those gems, those hidden gems that the juniors have got, and they're maybe constrained by finance. So you're trying to pick those good ones as well as the stuff you do yourself. Where I think there's a challenge is the early stage grassroots work. There isn't a lot of that going on in the industry, whether it's majors or juniors, and that's the front end of the business.
But there has been a lot over the last 10 years, though. And, there's been a lot of money invested in the last 10 years, and I think that data is all out there for us to sort of gather together and see what. I mean, a lot of people gather a lot of data and they don't use it. We've seen that. You've seen it in a lot of juniors. Do a lot of stream geochem, soil geochemistry. They get the data in, and you haven't got the booming number, so that they stop.
Here's the problem we face. If I come to a banker and I say, I've got this U-Butte concept that there's this graben out here in the middle of the jungle, and I've got a bit of gold on surface, and I think there might be something down there, it's much tougher to get money than if I came to you and said, look, I've got this old rat shit project that's been drilled a number of times, but there's some good holes into it, I can duplicate those. What's easier to get money?
Well, risk capital is selective in terms of where it goes. The market will pay for really good ideas and good prospects. But generally, in my experience, the market pays for people that actually have track records. They'll actually back the horse, not necessarily the prospect. And you'll end up being able to work through this cycle.
Yeah, it's a very people-orientated industry, in my opinion.
Always has been.
Yeah, especially with respect to raising money.
You mentioned cycles. There's been a lot of talk about ore grades not being as high as they used to be. New discoveries aren't where they were maybe 10 years ago. Is that also a cycle, or?
Well, that it's a cycle so much. I mean, the market, which most of the public companies are part of a market, has demanded growth and priced a commodity up, so grades have gone down to reflect the commodity price going up.
Yes, of course. I mean, you try marketing 0.6 gold when it's $300 per ounce. It's a tough market.
If prices come back, grades will go back up and costs will come down. It's basic supply demand. Right now, we've got a fairly high gold price, so you can mine down to a gram. A gram of gold's worth $50. You can do a lot of things with a $50 rock. So it all comes down to the numbers that are associated with that. But if gold price comes back, or if metal prices come back, you'll see certain mines will get shut down, marginal projects will get shut down, but good projects will still continue to survive and will endure. The world will not, the business won't end, the world won't end.
But you say prices come back, we're still at $1,550 gold, it's a great price.
Yeah, but these guys aren't, by and large, they're not making that much money. I mean, some companies are, but by and large, with the increase in whatever the metal price.
Brent, part of that equation, I would blame that the market demanded growth out of every company. They would reward growth, they would price a premium into a company that had growth. So people were just trying to give the market what they wanted, rather than be disciplined businessmen that would make high margins. So the market was looking for growth. Now they're looking for returns. So the businesses turn around a little bit slower than what the market would like. I still think that in terms of what we do, which is look for the best quality deposits that are out there, that search will continue, and there still will be good quality deposits found.
Yeah, and I think you have to get away from this trends are an average. So when you say the grades are going lower, the mines are getting deeper, everyone's going to risky countries, that's a trend. That doesn't mean that there's not companies finding high-grade deposits. It doesn't mean you're not finding outcropping deposits. It doesn't mean you can't find deposits in low-risk countries. Okay. But as an average trend, so you always want to be better than average. So it's an 80-20 thing. 80% of the value, top 20 deposits in the world, 80% of the discoveries, the top 20 explorers in the world. And that's juniors, mid-cap and majors. So it's been better than average, and that's people.
Well, actually, what you just said, the Detour Gold recently began production, commercial production, not commercial, but began production at their Detour Lake mine. And that's an old mine, or an older mine that was in production years ago. So the gold was still there. I guess are there other projects like that, other mines in the world that you think would have 600,000 ounces a year around?
The short answer to your question is yes. Whether or not Detour is that mine or not remains to be seen. They're going to go through a high-risk commissioning phase, and we'll all look at it with interest. But you can look around Highcroft is another mine that it was a historic producer, shut down. They're restarting and building a plant. It is meant to be one of the biggest mines on the planet. That's not unusual. Most of us around the table will go to districts and look for deposits where they've already been found.
Yeah, it's a balance, isn't it? Depends what your risk appetite is. Some people will be driven by frontiers, new places. Other people head frame, lower risk. And then it's getting the right mixture. So you've got a portfolio that looks at the broad range of risks, and the sort of appetite your company has for that. And every company will be different. Some are single commodities.
And the appetite the market's got for it as well, on the junior side, right? Like you said, to go and raise money for a grassroots idea right now is much more difficult than it is to explore and go to Nevada and with a model.
There's tremendous value added, though, in a new discovery in an unknown district. For example, what's happening right now in the Dominican Republic, what happened several years ago in Mongolia, for example. These are places where no one really thought of going.
No, I reckon, and for good reason, because now they're changing the rules all the time in both the two jurisdictions you just mentioned.
Yeah, there's a penalty for success.
The junior market is always the trailblazing part of the market, though. Yeah. They will take 15, 20, 30 million bucks and go into a new jurisdiction, whether it's Mongolia or any other kind of new area, and do real grassroots exploration and come up with new discoveries. That, to me, is one of the ways that this business keeps on regenerating itself, with somebody that comes up with a new idea, whether it's into a new jurisdiction or somebody that goes into the Carlin Trend and tries to drill a new concept in the Carlin.
Right. And that's the excitement to the industry, right? For explorationists.
It's intellectually very interesting.
I want to bring up a point that, Brent, you've emphasized a lot throughout the year, and you've said how a lot of juniors will disappear by the end of 2013. I'd like to ask you all, A, do you think this is a good thing? And B, who survives? Is it really survival of the fittest or just maybe the smartest?
I'll start. And what Graham's point was, he said there's the 20% that are actually doing something worthwhile, and there's the 80% that aren't. And I see that everywhere I go, and you guys probably do too, is most of the projects that are being worked by these junior companies just don't stand a chance to start with, or if they're successful, they're not really important. That's what I see more often than not. And that's just a function of there's too many of us looking, and the way the earth evolves, as it changes, it creates anomalies. That's what it does, geochemical or geophysical, whatever. And so we as an industry go out and look at these things and try to figure them out. The problem is that too many of us spend too much time on things that aren't anything but anomalies.
You mean us? Talk to yourself.
I think you're saying the industry. Yeah, I mean, would you agree with that?
Yeah, absolutely. I mean,
but Brent, how many people do you think how many companies do you think will disappear from the scene?
I don't know, 600.
I would have thought more than that.
600 by the end of 2013.
By June.
By June.
I was trying to be nice.
Well, that depends if the market turns next month, and none of us really.
Do you see that as a real possibility?
No, but that doesn't mean it's impossible, though. I don't think it's a real possibility, but it could happen.
Yeah. It would take something extraordinary, I think.
Like it did in 2008, 2009. I mean, this is not as severe a drop, but it won't be a severe bounce back up. But none of us expected that bounce back in 2009, did we? Did anybody see it?
So Simon, am I sensing that unlike mining CEOs, geologists are not as bullish on gold?
I don't know, ask them.
Silence.
No, I don't think it's not.
Answer,
that's.
Right? No.
I mean, my view is that this coming bust, or that we're in at the moment, is not really commodity driven. There's the worldwide economic factors as well, and if someone can solve the Europe crisis in the next month, that would be fantastic.
Right. I agree. And it's not just about the economic situation. It's also about the failure of the market, of the mining market, not just the juniors, the seniors as well, to perform. You look at the gold price. You look at the graph of the prices of the majors and of the juniors, and everybody's lost money.
Yeah, there's been some very interesting examples in the majors recently.
That's in part true, but the one thing that's changed is that the industry did it to themselves in some respects, because they were a proponent of the GLD, the new ETF, so investors could get exposure to, say, a gold as an investment without necessarily investing in a gold company. So what actually happened was you took the optionality out of finding gold in the ground and put it into an ETF. So a lot of money has moved into that. That's in on one part, it's raised the equity prices it's raised the gold price. It's depressed the equity price. So now gold companies have to run like a business. And I think, it was a great idea. It's turned out to be a really bad idea because it's taken the optionality out of gold exploration.
Right, because you can remove the risk of management.
Right. So that whole thing, that disconnect, is part of the evolution of the market. We just have to adapt to that. I still think that we're all out there looking for the best quality opportunities that we can find. And it's you get together at a conference like the PDAC, and that's where you're going to find the one or two ideas. There's not a lot of ideas. There's a handful of really good ideas every year. There's not an unlimited amount. Whereas if you look back when the bull market's on, everybody's saying they've got a great idea.
Yeah, but you just got to look. We pick up one sheet and look under. I mean, I've been roaming around looking at projects for the last 3 months because I have a company that's financed, and we're in Guatemala, which is a sort of, I can't explore there right now. So we got the financing. We have the geologists. So I've been working with them, looking at projects all over the world, and I'm amazed about the crap, I can use that word, I've seen. It looks good on paper, then you go down there, look at the project, and you go, why?
Most of us that have gone out and climbed over a couple of rocks realize how hard it is to find something good.
Well, they've drilled up, they keep drilling projects, and you go and look at them, and you go, there's a river 400 meters away that's fished by thousands of Americans every year. Why bother? Why bother? Exactly. And they say because we can raise money with it, which is the banker's fault.
I was at the BMO conference in Florida last week, and there were 14 new mining CEOs compared to last year. 14 new mining CEOs. Do you think we're going to see a wave of change, of better management behind mining companies? I had a good interview with Donald Cox of BMO, and he was bullish on gold stocks. Then he changed his tune a bit in my last interview, and he said, I changed my tune because I didn't realize how bad some of the mistakes mining companies made were. So do you think we're going to see a change of better management behind mining companies?
Well, I think if you look at I think there's been 15 to 20 new CEOs in the last 2 years, and the mantra seems to be, back to basics, costs, efficiency, no M&A, organic pipelines only, don't go and buy stuff, accountability. So what you're actually seeing is the change from the sort of aspirational bull market, buy everything because we want to grow, don't worry about the cost, hence the write-downs, to a much more fiscally prudent, efficiency-driven business.
And do you agree? Do you think that is what is needed?
I think that swings and roundabouts, because if you go to extremes, then the problem is the first thing you're going to cut is your discretionary expenditure, and many times that's exploration, research, people, the talent.
Like Barrick
so it's where do you go in the extreme, and that's the problem. It's knee-jerk reactions to market pressures.
I mean, was the comment Barrick made, we're not going to build any new mines for the next few years. I mean, how does a mining company make that statement?
Gentlemen, what does it take to find a new deposit?
Luck. Sorry.
I don't know how many.
Luck and people. People and luck.
And positioning.
Okay. Money, yeah, finance.
So how many holes did it take Ivahoe to find OT?
To find Hugo, within an area of about 8 square kilometres, more than 300 holes, including RC.
I drilled a discovery. It was hole 326. That was my hole.
That's a lot of money. I mean, there's no junior can do that.
All right. I guess maybe on a lighter note, as we're all geologists, what maybe not necessarily your biggest discovery, but your favorite discovery throughout your career?
Probably the one that's most closest to my heart is Musselwhite. I drilled the discovery hole and did the work on that actually got that going. So that ranks really high in my view.
One of the most interesting things I've been involved with was totally by accident, and that was the Merlin Rhenium Moly discovery in Cloncurry in Australia. And it was very much a team effort, and there was a lot of serendipity involved, but we're out there drilling and found something that's possibly unique in the world.
I think I've been involved peripherally with some early stage. I identified some really interesting projects that turned into mines, but at the time I didn't have the ability to raise enough money, so it was identified and then we went broke.
Probably with my career, and the most exciting so far has been the Los Sulfatos copper deposit in Chile. It's double the grade of the average for the industry, and it's equivalent to about what the whole world uses in copper in 1 year. So it's a very significant discovery, and it's 7 kilometres from an operating mine, and it's outcropping.
I'm still looking.
I thought I'd just get that in there.
I made a couple, but I'm not going to compete with these guys.
Well, we all have a job to get back to at PDAC, so I'm going to wrap it up. But before we let everyone go, I just want to say that it's not true that geologists don't have a heart, right? Who has the biggest heart here? Apparently, Doug does. Ron, you want to explain it?
No, Doug, during his career, went around to many of the deposits in the world and collected rock samples. His wife finally decided that he had too many rocks in his house, and so he donated the rocks to the Royal Ontario Museum. And it was a wonderful event that was sponsored by industry. And it's just an example of how industry actually gives back to education and the world. And it was a personal endeavor of Doug, and I'd like to acknowledge that. I think it's a great thing.
Thank you very much. The objective of really doing that was to give something back, certainly, but also for the younger geologists and people still at uni, they've got the opportunity to look at rocks, and that's just so important to be a successful geologist.
Well, on that note, thank you all. Brett, thank you for rounding up your best friends. It was good. It was a good chat. Hope everyone enjoyed it. So Ron, thank you. Doug, thank you. Brett, thank you. Simon, thank you. Graham, and last but not least, colleague Alex, thank you. And thank you all for watching. You can email us any comments, questions, or curiosities you might have after this segment at newsfeedback@kitco.com. Thanks for watching. Reporting from Toronto, Canada, I'm Daniela Cambone.